If you're running a business, you already know cash flow is the lifeblood of your operation. And yet, 60% of small businesses experience a cash flow crunch every single year. So if you're feeling the pinch, you're not alone, and you're definitely in the right place. This session is all about practical, no nonsense advice for improving cash flow and reducing financial stress using one of the best tools available to Aussie businesses, Xero. So, what will we be covering today? Why cash flow is the number one reason businesses fail and what to do about it. The four biggest traps, from unrealistic sales expectations to slow payers, pro tips on forecasting, automation, and building a cash buffer. And we will also have a live Xero walkthrough showing dashboards, invoice tools, age receivables, and cash flow statements in action. Also how to link cash flow to your financial reports as well for real-time decisions. I forgot about that one as well. Excellent. Now, before we jump in, quick show of hands in the chat if you've ever been caught off guard by a surprise expense. So you can just go ahead and throw a yes in the chat. Ooh. Oh dear. Oh, guys. No. I was expecting no's. I was like, oh, we have some. Okay. So it looks like you have definitely come to the right place. Right. Well, the good news, guys, is that we're going to cover most of these issues on today's webinar. And hopefully, we're hoping by the end of it, you'll have enough ammunition and enough education to feel more confident moving forward. And the hopes is that you can avoid these kind of things. Now, in today's session, we have two very special guests. First of all is everyone's favorite, Timothy Quinn, our head of tax and accounting over here at Lawpath Tax and Advisory. For those who don't know him, Tim is a chartered accountant with 18 years of experience advising businesses on tax planning, structuring, compliance, and financial strategy. He's worked at the director level, leading tax divisions and helping businesses optimize their tax position. Now we have a super special guest, someone who's first time visiting Lawpath and joining us on one of our webinars, is Fiona O'Farrell, one of the education specialists over at Xero. So Fiona has, with 3 years of experience on the Xero education team, Fiona brings vast experience supporting small businesses across Australia and New Zealand. She's passionate about helping business owners streamline their workflows and maximize the value of their software. So the perfect candidate to be joining us today for essentially what is an extremely important topic to be going over in relation to Xero. Now, again, for anyone who is new, we will produce an email after this. We will give you all the slides from today. We'll upload the session's YouTube link. We will have information on Fiona and Tim. If there's any further communication you wish to have, we will have our partner offers, including Xero's 90% off for the first 6 months, available for anyone who attended today, as well as all of our other discounted offers for our accounting and tax. So make sure that if you do have to jump out or leave a bit earlier, to not worry, because I will send an email out to both those who RSVP and those who didn't. Now, I dare say we're about ready to jump into it. So I'm going to go ahead and pass it over to the boss man, Tim. And from everyone over here at Lawpath, thank you so much for joining us today.
Thank you very much, Joel. Always a pleasure and always a very kind introduction. And how wonderful to have Fiona with us today. It's one thing when I tell you all the theory and the highfalutin ideas that I've got. It's another to see how it works in practice. We understand here at Lawpath that running a small business is complicated, and Fiona's going to show some shortcuts and how to get these things done. Now, the answer to the question why this matters is probably seen in the chat already. How many people on this call have come up with these unexpected bills? You don't get taught how to do this in school. You don't get taught the idea that cash is king and how do you track that in accounting software. The issue is you can have the most profitable business known to man and you can still come a cropper. So we see failure risks. I've been working with small businesses for a long time now, and I've seen profitable businesses fail. So I want to help you avoid those risks. And how we talk about cash flow is very vital to that discussion of how to build a business that is resilient. So we'll jump straight into it when we're talking about these things. Why does it matter? What's the difference really? Cash flow is what it says on the tin. It's cash in, it's cash out. It's paying the bills. It's paying your staff. It's all of these important things. It's getting paid by your customers. It's exciting getting paid by your customers. It's much less exciting issuing an invoice that sits there in someone's bottom drawer for 6 months while you're trying to pay your staff. From a profit and loss perspective, and those of you that came to my last webinar know enough about profit and loss statements, looks fine on your P&L. You've got the income until the cash is sitting in your bank and then instantly gone out the other end. It doesn't mean a thing to keeping your business running. We know that small businesses experience cash flow crunch. When we say 60% there, I would say 60% of profitable, successful small businesses experience cash flow crunch. And I would say that every single unsuccessful, ultimately small business will experience cash flow crunch. So profit's nice, cash is king. When you've got positive cash flows, you've got breathing room. You've got not just room to keep running and keep the lights on, you've got room to grow. If you've got positive cash flow and you can track your cash flow, if you know that you're always going to have a certain amount of buffer, well, maybe it's the time to invest that buffer and then grow and scale and make more money for you and your family. So that's why cash flow is so important. What happens if your cash flow is poor? We've all seen it, and I'm going to start to complain about some big players out there in the market, but potentially your Woolies and the Coles. What happens when you can't pay your bills because you're not getting paid? Is that you in turn have to pay your suppliers late. If you've got key suppliers that you can't pay on time because you yourself are not getting paid on time, those relationships are going to strain and ultimately burst. And if you've got key relationships that you rely on to keep your business going, at some point they're not going to take checks in the mail as an answer for very much longer, and your business could be at huge risk. Payroll, again, for those of you that come to a lot of these, we talk about the changes to payroll reporting and compliance in Australia in the last few years. This idea of this renewed focus on wage theft is the idea that if you don't pay your employees on time, not only are they likely to leave and potentially sue you, but the ATO knows about it straight away. They know about it within a day, and they're going to stop giving you tax deductions for if you're not paying your staff on time, if you're not paying the super on time. So it's going to be very, very important that you've got the cash to pay those wages on time. Again, the missed growth opportunities. If you're living hand to mouth and you're just scrabbling to pay the bills and you're paying them late, you're not going to have that cash to invest in growth. And of course, and I think this is the number one thing that I've learned since working with small businesses, is that it's hard enough to run a business and do the nuts and bolts of running a business without the sleepless nights, without worrying about what's coming tomorrow, and it's not necessarily is the bailiff coming. There are micro levels of these just constant stresses and pressures that are going to stop you from being your best. So we've just drawn a little chart here just to show what this looks like. This could be a perfectly profitable business, actually. You can see we've got some periods there in March where we've got plenty of cash coming in, more than that's going out. Is a business like this going to make it to March? Not necessarily. It depends on if we look in January and February there, we can say that we see that we've got a lot more cash going out than is going in. Now, do we have a business loan? Do we have an overdraft? Can we actually fund that cash gap to get us through to the successful periods? Potentially not. Potentially that month in April, that's a shocker when we've got heaps going out and nothing's coming in. That could be the dying death of this business in this example. This could be an overall profitable business, but if we can't fund those bad months, if we can't fund when the cash isn't there to pay the essential bills, this could be the end of your business. So timing is important. It's not enough just to look overall. When we're looking at cash flow, we're saying, is there always enough cash in this business? Not, is there at the end of a particular period? We'll talk through some traps that we see, and these are not merely just theoretical. I've seen them all, and they're very, very common. So overestimating your inflow, your revenue. I love when small businesses come to me with projections, and I say, your business sounds great. If it does, I don't pander. I've seen plenty of great business plans where I say, come back to me, and what if your sales are half what they're expected? Or what if they take 12 months longer to kick off than you're expected? How resilient is your business to your big sky thinking? Because I haven't seen many in my entire career, like Joel said, 18 years, I haven't seen many businesses where they've underestimated sales. I've seen plenty where they've overestimated. So when you're coming in and doing this, you should have an idea of what you think will happen. Have a growth plan if you want, but have a base scenario. Know how much you need to be making now and how much cash coming in now to keep the lights on. Plenty of small businesses in Australia. Our economy's built on the sheep's back, as they used to say. The seasonal peaks are huge, and I think people that live and work on the land understand this well enough without me lecturing to them. But I think that there's plenty of lessons that those of us in white collar industries can learn. The idea that no business is the same month on month. I'd say without preempting Fiona, even Xero's business has months of big sales and months of very poor sales. It's very typical. It's understanding those peaks, budgeting for them, knowing when you're going to need to dip into your cash buffer or potentially dip into overdraft. It's too late if it's, I've got to pay payroll today. You're not going to get a new overdraft approved, probably, or a new loan in place to pay today's bills. But if you've done your work and you know that 3 months away that's coming up, you've got time to plan. So understand your seasons. The discount traps, they're real. We see them all the time. You get that short-term sugar hit. I want some sales in the door. You've got to then service that, of course. And if you take too much of a hit to your margin, you'll never recover. Customer concentration is another common one, particularly in small businesses. And this is where I might drag on the big supermarkets. I've had some wonderful small businesses that were very proud of getting shelf placement in big stores, and were less proud when they realized that they were given 120-day payment terms. Now, that's fine if you're a big customer with shareholders to lean on. If you're a small business that's got to pay 6 months of payroll before you're seeing a cent from your placement in Woolies or Coles, that's going to hurt you. So all of these things are manageable if you know about them, but if you don't do your planning, they will kill you. So like I said, collections issues, these 30-day terms are common, and maybe that's when some suppliers will start actually collecting. Not at the outer. So those slow collections are killers. Not being on top of collecting those, and chasing, and just doing it once a year sometimes. So the number of times I've had to drop the bad news of, well, your accounts receivables showing a huge balance and a lot of it's old, and they say, I just don't keep a track of it. I'm too busy. So if you're not following up, if you're not staying on top of it, it's too late to do anything about it. And again, those overly generous terms, sometimes you don't need to offer them. Sometimes you can offer, look, if you're paying on time, this is the rate and this is the discount, but you need to be clear on charging interest beyond those terms, and basically making it worth their while to pay on terms. If you do extend too much credit, this is another huge risk. Obviously, you think about the sort of customer that needs extended credit terms, potentially because they've got their own cash flow concerns. All you are doing is you are importing their concerns into your business. If you've let someone off the hook for months and they're not paying you, the odds are that business is probably not doing crash hot, and potentially you join the back of the queue of unsecured creditors. So if that business goes bust, you're going to be the last one to get paid. And having seen enough of these liquidation statements at the end, you'll be getting pennies on the dollar, if that. The old unplanned expenses, again, the flip side of those nice generous budgets where you think your sales are going to be huge. No one expects these unexpected bills, but they happen in small businesses. If you're a capital intensive business that relies on equipment and machinery, these things can break. You might have insurance for them, but if you think your insurance is going to pay out on a huge piece of machinery in the time frame that you need to get it up and running again, you'd be sadly mistaken. So you've got to understand that even when you've got insurance coverage for these things, there's going to be a delay in cash that's really going to hit you. Likewise, the overcommitment, and if you are growth focused, and you see $100,000 in your business bank account and think, well, I'll be conservative and I'll commit $90,000 to this particular thing. If that 100,000 turns into 90,000 tomorrow because you had a direct debit come out, and the day after you've got to pay payroll, suddenly you've drawn yourself short, and you're not going to be able to meet those bills, and you're going to be pedaling just to keep up at that point. So what happens when you don't have that safety net, that cash buffer, is of course you start to incur interest costs. Now, a few years ago when interest rates were 2-3%, that's not too much for drama. Accessing business credit, of course, is getting more expensive and more difficult. So if you're trying to do that last minute, you're going to pay for it. It's going to be very expensive for you. So like I said, with these issues, they're all basically solvable. If you've got an essentially good business, if you've got a profitable business, you can solve cash flow issues as long as you know about them. If you don't have visibility, by which I don't just mean you could get visibility if you checked, are you actively monitoring your cash flow situation? If not, if you're just doing it on your gut, if you go, oh, I know I've got my BAS is coming up. It's roughly always 25K, or I feel like I'm going to, this machine's on its last legs. You're just going on gut feel. She'll be right, this sort of thing. Or you're not even noticing until you get the text from your bank saying you're overdrawn. It's really going to be hard to actually recover from that issue. If you've got the visibility, if you say, I know what's coming up, I know exactly when my cash is projected to hit zero or to hit $10,000. And I know that I need to access, or that I might need to access funding at that time. You're going to get yourself through a short-term bind. Otherwise, these short-term issues can be intractable. So if you're proactive, if you're on top of these sort of reports, if you've looked into the future, you can plan and be confident in your decision making at that time. So what are some strategies? These won't surprise you. These are kind of the same strategies I talk about from an accounting perspective for business every single time we meet on these webinar series. The more you know, the more you can do. And if you put your head in the sand, or if you just take a she'll be right approach, you're not going to be able to build your business in a way that's going to be successful. So the first step to any forecast is understand your history. It's difficult when you're starting out new and you're making these wonderful pie in the sky forecasts because you don't know your historical data. Okay, no more excuses. You've been running your business for a little while now, got a few months of actual data under the hood. If you are just ignoring that and doing a new forecast every time blind, you're shooting yourself in the foot. Let's take the history as a metric, as a baseline metric. Let's assume that nothing else changes. That's going to be our baseline. Off the back of that, what's going to change? What do I know about my business? Because I know better than everyone else. Even if I've got a great accountant, they don't know as much about my business as I do. Let's use that information to talk about seasonal impacts, to talk about new product offerings. Hey, we've got this new thing coming out next month. It's going to be great for sales in 6 months. But for the next 3 months, it's going to cost us. We're going to have to pay for more marketing. We're going to have to pay for more salespeople. Okay, I'm going to build that into my cash flow projections. I'm going to say, look, here's a dip. Here's where things are going to be tight. Where maybe I push back some expenses that I could, some capital injection, that I need to make now, because I think that it's going to come good in 6 months. And you track against that on a monthly forecast. The stress test, that's what I mentioned before on the budgets. What happens if sales cut off 50%? What happens if the American president imposes 100% tariffs on my movie that I was planning on making. Okay, this is a stress test scenario that we put into place. What if I sell pharmaceuticals and suddenly my market's closed off? You need to stress test this. You need to be realistic. And it's not all doom and gloom. It's to say, well, what does happen if things go wrong? And if there is a stress test scenario that's realistic that says, at this point, my business is going to be bankrupt. Well, okay, better that you know now, and better that you know that if that event occurs, you can exit in a calm and orderly fashion from your business. It's not something that people want to think about. You only want to think about the good times, but getting out of a failing business on time is just as important as growing your business. So you got to update these things regularly, garbage in, garbage out, as we say. If you just set and forget, you're never going to look at it. It's never going to be useful. You got to keep looking at it once a month, seeing how'd you go last month against your forecast. What do I need to change to be more accurate next month? And the most important thing is the link to the decision making. It's going to be unconscious at the subconscious at that point. It's going to be if you're in the forecasts enough and they're proving accurate, they are going to inform your decisions because you're going to know exactly what you need to do. So, I say no doom and gloom. I've probably been a bit doom and gloom. I've talked about these issues that can arise. Well, there are ways that you can help yourself out. There are ways that you can improve your business operations to reduce cash flow stress. Like I mentioned, you can incentivize fast payment. You can issue an invoice that says, well, here's your $1,000 invoice. It's $950 if you pay it within 14 days. You got to be strict. You can't just be incentivizing everyone. But if you offer discounts for early settlement and you know that having that cash in your bank is going to save you interest costs on having to borrow the money, or it's going to mean you can't pay your staff on time and you're going to lose tax deductions, that's a worthwhile investment. It's a worthwhile incentive. Give people the ways to pay that suit them. Yeah, it costs more to get paid by credit card and by direct debit and things like that. But if you remove these barriers to payment, you're much more likely to collect. And that's frankly why more and more businesses offer them. I know that the way I pay my own bills in my life, which is haphazard to say the least, apologies to my children's childcare centre, I pay them when it's convenient for me in a convenient way. So if I'm sitting on the lounge watching Highway Patrol and I get a text from the service saying, here's your payment, pay it now, click a button, here's my credit card pre-filled. I might be paying a credit card fee myself on that. But rather than boosting up the laptop and sitting down and doing a bank transfer, I'll take the credit card option 99 times out of 100. So again, maybe copping a little bit on the profit to enhance the cash is sometimes worth doing. Those automated reminders. When Xero came out with that function just to issue an invoice and send the follow-up, I don't have to worry about it. I don't have to track it. If it's getting sent, it's getting repaid. It is the most obvious thing in the world, but a lot of people don't think about it. If you leave an invoice for 30 days, what are the odds that it gets paid between day 7 and day 29? Practically nothing. You either pay it when you get it or you pay it when you get a reminder. These spikes of actual payments when you get automated reminders, you'd be mad not to integrate them into Xero. Xero makes it super easy and straightforward. The follow-ups, look, automation's great, but if you're ignoring all of your follow-ups, that is what it is. That's when that personal contact is important. It's why big businesses cover higher AR, accounts receivable people, to literally get on the phone. Hey, you owe us this money. Have an escalation chart. You don't basically have to go out and sue them. They're a day late. That's a complete waste of time. But you need to have an escalation path that says you're overdue on your payment. Mate, have you got a minute to sort it out? Depends on your relationships, but you have to escalate to a point of actually getting paid. The clear upfront terms is a no-brainer. If you're throwing reminders at people and you haven't actually told them when they've got to pay, no one's going to be happy with that. So make everyone on track and on top of these things at the same time. So what have we done? If we follow all those tips and tricks and you've listened to me and you've acted, we've built a resilient business. We've got a buffer. Now, I've said 3 months of operating expenses in reserve. If you've got a business with 3 months of operating expenses in your reserve, my hat goes off to you. I don't see that many of them, to be frank. I think that's pretty uncommon. It's pretty unrealistic, but it's a great thing to aim for, right? Sometimes in my team, I might have some high targets. I might fall a bit short, and I'm still a happy man. So aim for that 3 month buffer. If you never get there, but you're running an okay business, you should be happy with that. Again, to the extent that you can, diversifying your income, particularly if you're in that lumpy sort of business. We've got a few big contracts, and then you're living hand to mouth and living on scraps. If you can smooth that out, if you can offer complementary products, by which I don't mean free, I mean products where you might be able to sell in troughs, in periods where a business is otherwise not generating cash. What can we do just to tide us over? Might not be the most profitable product out there, but if it suits your cash flow and if it props you up in times like that, diversification can be great. This is a no-brainer. All small businesses control the discretionary spend. No one's out there flashing the Amex and buying silly stuff in businesses, no, not successful businesses anyway. But of course, you know when to tighten the belt if you've done your planning in a resilient business. And in a resilient business, you know when you need to have access to finance, whether that's you injecting funds as an owner, or whether that's credit facilities, debt facilities. All the banks out there want your custom. You'll pay for it, but sometimes it's worthwhile to keep the business afloat. This is the moment that you've all been waiting for. This is where I get to really pass off to an absolute expert in her field. I'm going to invite Fiona to step in and walk us through a demo. Fiona, over to you.
Thank you, Tim. I don't need to introduce myself now because I've had such an amazing introduction. So thank you so much. Hopefully everybody can see my slide. Just let me know if there's any issues. I'll keep an eye on the chat just in case. But I'm going to be starting by giving a quick overview of what Xero is and our purpose, just in case there's anyone here who isn't familiar with Xero. So Xero's purpose is to make life better for people in small business, their advisors and community around the world, or communities around the world. So today I'm going to be giving you a bit of a sneak peek into how it can help make your life better by focusing on cash flow. So again, for those of you who aren't familiar with Xero, our Xero platform is designed to support our small business clients and our accounting and bookkeeping partners. Accounting software is only one part of the Xero platform. The beauty of the platform is that it allows small businesses to connect directly with a range of entities. We connect businesses with their banks to get bank feeds flowing directly into their Xero organization every day. We connect them with government agencies, providing them with the ability to file their GST returns or payroll returns with the ATO. And there's also an incredible range of apps that connect and sync with Xero. We have over 1,000 apps that are part of our Xero App Store. So now that you all have an idea of what Xero actually is, we're going to see how it can help a small business or their advisor, accountant or bookkeeper with their cash flow. So we're going to start with incoming cash flow or your sales. So we all know it creates the lifeblood of any business. So I'm sure you'll agree that any way to help speed up getting paid, streamline your debtor management, or actively manage your cash flow is, of course, very beneficial. So there are some really easy tools to manage debtors in Xero. And the ones I'm going to focus on today are activating invoice reminders and setting up online invoice payments. And I think Tim actually introduced those a little bit earlier as well. And I want to highlight a key report for managing debtors, which is the Age Receivables Summary Report. So we're going to jump straight into Xero now and have a look at these tools. So for those of you who haven't seen Xero yet, this is a dashboard that all users have access to. So this is where you're going to land when you first log into Xero. So just to give you a sneak peek of that before we get into our tools, you can see some key information here about your business as soon as you log in. So you can see your details coming through from your bank feeds that are connected. We have our invoices owed to you, our bills you need to pay, and a quick look at your cash flow as well to see where you're standing with that. And we also have an account watch list. And this is where you can select certain accounts that you want to include on the dashboard that you want to keep a closer eye on. So it might be something like the entertainment account, just to make sure you're across the staff spending, and in case there's anything that you need to follow up with any staff members there. So we'll move on to the invoices screen now, because I want to get into that first tool, which is invoice reminders. So we're going to get there from the sales tab. So this feature helps you to avoid awkward conversations with some customers chasing up late payments. Because when you have this switched on, Xero is going to send out automatic reminders on overdue invoices or on invoices that are due soon. So you can leave these current defaults here if you want regular reminders to be sent out. So if I leave these defaults here, Xero is going to send an email to the customer automatically when their invoice is 7, 14, and 21 days overdue. We can add a new reminder here, or we can edit one of the defaults. So basically, we can choose how often we want to send them. In this case, let's just set or edit this first reminder here so that it's sent a few days before the due date. So let's say when the invoice is due in 2 days. So this way, we're going to give our customers the extra nudge that they might need. You might have noticed as well, and it would happen very quickly, so I don't blame you if you didn't, but this text here actually changed as well to reflect those changes when I changed it from overdue to due in. And you can further change that text as well if you want to suit the messaging that you usually use in your business. We have a few other options here when it comes to these invoice reminders, including setting an amount that you don't want reminders to be sent for. So you can just tick that checkbox and then just enter the amount. You can also choose which user you want the replies to be sent to. So maybe you have an invoice clerk that you prefer the replies to go to. You can just select them from that list. Now, finally, you might be wondering, what about customers that you don't want to send these to? For example, you might have a payment agreement, or you don't want to damage a relationship with a particular customer, so you don't want to annoy them by sending these reminders. So the great thing is that you can turn reminders off for specific customers in their contact record, or you can do it from directly within an invoice as well. So it is fully customizable. So invoice reminders give your customers an extra nudge and hopefully get cash in the door faster. Another really helpful tool we have for incoming cash flow is online invoice payments, which Tim did talk to you about the benefits of already. And simply put, online payment solutions in Xero allow customers to accept payments online directly from a Xero email or invoice. And we actually have stats to prove that setting up online payments gets you paid twice as fast, because it makes it really, really easy for your customers to pay you. So it removes any of those barriers that might be in the way. They can easily make payment with the click to pay functionality straight from the invoice, and then make the payment using the payment methods that you've enabled. So these include things like credit card, debit card, digital wallets, PayPal, direct debit, and Apple Pay and Google Pay. So on this online payment screen that we're on at the moment, this is going to give you all of the key information that we need to help with the setup. There's a really helpful video here, and then lots of information as you scroll through. And it actually tells us here how the online payments actually work. I will call out some key information though. So it is free and it's easy to get set up. So most people actually complete setup within 10 minutes. There's no sign up, there's no ongoing subscription costs. You'll only be charged if your customer chooses to pay using that online payment method that you've enabled. And if you want, this is a question that we do get asked all the time, so I know that you're probably curious about this one. This transaction fee can be passed on to your client depending on the payment provider. So you can do that with Stripe, and this gives you even more control. We have Stripe here, and we also have Go Cardless and PayPal as well. Now, Stripe and Go Cardless have the most comprehensive integration with Xero, but you can add another payment provider if you want, just by visiting the Xero App Store. And this link here will bring you directly to the App Store to select another payment provider if that's what you want to do. So online payments is definitely a tool that can help with your incoming cash flow that we recommend you use if you're using Xero. So do let us know in that Q&A box if you do have any questions about online payments or any of the tools that I'm covering today, and I will make sure to get back to you a bit later. Now, another great way to keep on top of your cash flow is by regularly checking the Aged Receivables Summary Report. So this is a key report to get a snapshot of your debtor position. Now, I do have this favorited here, and if you do want to know how to favorite a report, if you're not familiar, just let me know as well, and I can let you know later. But I have it favorited, so this is going to be easily accessible for me once I click on the reporting tab, because this is a report that I do check regularly. But you can find this in all reports, so we'll jump in there. And this is sitting under the payables and receivables section of your reports. So this is a really valuable report. We can see here who owes me what and for how long. I also recommend selecting some more columns just to give a better bird's eye view of what's happening. So we can select available credit, credit limit, mobile, phone, and primary person. And when we update that, we can see if they have a credit limit, any available credit they might have, and we also have the ability to pick up the phone right from within this report and chase those customers that need additional follow-up. So for example, with Bayside Club here, I have Nigel's contact details right there. So I can pick up the phone. I don't need to go through and look at a notebook of contact details if that's what any of you are still using. Now, if you do want to see this information, you need to add this to your customers' details in their contacts records so they flow through to this report. So for example, I might want to do that with Build with Rob here. It would make it really easy if I just had the details right there and didn't need to go and click into their record. What you can also do with this as well is save it as a custom report. So if I save this one, I'll just call it contacts, for example. I'm going to easily be able to pull up this report and use it to work on getting more cash in the door. Oh, I've obviously already saved one with contacts, so I'll just change that. I can also make it the default as well. Awesome. So now I have a report readily available with the contact details right there, so we don't have to go looking in their contact record or again somewhere else like a notebook for their contact details. Okay, so switching gears now to money going out. There are a lot of tools to help you really save time and automate processes when it comes to paying your suppliers. And obviously you want to get your supplier bills paid as quickly and easily as possible. So the tools that I'm going to show you today to help with this are using planned dates to schedule when bills need to be paid and using batch payments to pay multiple bills at once. Ideally, a bulk supplier pay run once a month. These tools will help to make sure that you can still fulfill your customer pipeline as well as keep on top of your payments. The Aged Payables Summary Report is also really beneficial to help you with your creditor management. So I am going to talk about that as well. So again, let's jump into Xero and go through a demo of these features. So we're going to start by looking at how to get bills paid as quickly and easily as possible, starting with planned dates. So we can do that from the awaiting payment queue of our bills. So we're going to get there from our purchases and then jump into our awaiting payment queue. By using planned dates, you can easily bundle your bills together and you can see straight away which bills are due and when. So we can see these planned dates here at the top. I've planned to pay 2 of my bills on the 30th of October, 2 on the 20th, and 3 on the 2nd, which is today. So we'll want to make sure that we do get on top of those in this session. Just to show you how to add these as well or make any changes. So there's quite a few ways. If you want to add it just for an individual bill, you can do it from the planned date column. Just select this, this option here to add the date. For this one, it's due on the 20th. So let me add that to my group of bills that I've already planned to pay on the 20th. And I'll be able to pay them all together on the 20th of October. You can also add plan dates. So I think I just selected the wrong date for that one. There we go, 20th of October. Oh, sorry, I was getting confused there. I kept on moving it down the list. So now I've moved lots of them into the 20th of October. Let me just change this one back because it is due on the 3rd. We do want to make sure that we change that that we pay that by today. And let me just pay this one today as well. Lovely. If you do want to add a plan date for multiple bills, you can select them from the list over on the left-hand side and then use the add planned date options that will add them in bulk. You can also remove a plan date from here as well, and you can make any changes. And when you jump into the plan date column, you can remove the plan date or you can make a change in there as well. Okay, so that's the first tool, which is planned dates. Now what we want to do is create a batch payment to pay multiple bills at once. So we have that, that group of bills that we've planned to pay today. So we do want to pay them all together to save us time paying them one by one. So to make the payment, I'm just going to select that group of bills that we want to pay. Let me select this one. Maybe I'll just refresh my screen. I think I've just thrown the system a little bit by clicking on too many things. So I'm going to select this first plan date here. Oh, for some reason, it's not letting me, not showing me them. That's very strange. It's never happened before, but of course, these things always happen on a live demo. Let me move away from the screen and go back in. There we go. Okay, about 10 clicks there. It doesn't usually need 10 clicks, I assure you. I'm sure some of you are familiar with this feature and that does not usually happen. So I've just selected this and it's just showing me those 3 bills that I've planned to pay today. So to save us paying them one by one, we can just select that tick box at the top to select them all together. And then we can create a batch payment to pay them all at once by using this Make Payment button. All we have to do now is just fill in the payment details. So we'll just select the bank account and continue on to review bills. It is confirming that we're creating a batch payment here as well. We have all of our bank details entered, so nothing that we need to do on this screen. We can continue on to our payment summary. And there we go. It confirms here that our batch payment has been created. So we can simply click Finish and view the batch. So once all of that has been filled in and the payments have been made, what you can do is export the file or the batch file from here, and then you can just import that file to your bank account to process the payments. So this is super easy. And now you have a more streamlined process for paying your suppliers. But let's now look at that key report I mentioned to help you get some insights into your payables. So what you need to pay. So from the reporting tab, I'm just going to jump straight into the aged payables summary report that I do have favorited. But again, you'd find this in the payables and receivables section of the all reports page. So you can use this report to make sure that you haven't missed any payments. So we can see the total amount here. And this total amount that's listed includes all outstanding bills, credit notes, expense claims, and overpayments. What you can do here as well is add the same columns that we did earlier for the aged receivables. So we could add email, phone, and primary person, and update. And then we have those contact details on hand if we need to get in touch with that supplier. So maybe with Mercury Energy here, I want to get in touch with Tim to maybe negotiate a payment term, for example. So it's really handy to just have them there. And again, you can save that as a custom report. Okay, so I have covered quite a few Xero tools that you can use for automation, but we're going to look at some tools now that can help with visibility. So it was some really important information that Tim gave you earlier about the importance of having visibility over your business. So we want to make sure that we do cover that today to show you those tools that can help you. So under reporting, we've got access here to Analytics Plus, and this includes the business snapshot and the short-term cash flow. So let's have a look at both of these. So the business snapshot shows you how the business is performing. So it gives you quick and easy information that's really easily understandable about your business. You can look at the profitability of the business for that selected period and how we're doing around efficiency. And if you do hover over this graph or any of the other graphs that you do see in the business snapshot, this is going to give you the ability to compare the figures year on year. So you can really identify any trends. And this is going to help you to understand this data a little bit better and allow you to better run your business. If you are working with an advisor, they can also help you to understand and use that data to help you understand things a little bit more. We can see the largest expenses in here in this expenses table, and you can also change this to see what expenses have increased the most since the previous year. So again, if you're working with an advisor, they could help you with realistic ways to keep these costs down as your business grows. Or it at least makes you think, if you're not working with an advisor, it at least makes you and your teammates have a think about how you can actually do that yourselves. We're going to have a look at the financial position and cash now, because of course, often getting paid and paying suppliers is where a lot of the cash flow stress lies. So we do have these two boxes on the right. Now it's not showing me any data at the moment for some reason for my average time to get paid, but this is going to let you see the average time it takes to pay suppliers and compare that with the average time it takes to get paid. So you can really work on some solutions, again, with your advisor if you're working with an advisor on how to get these in line if needed. Now, if you do enable this toggle at the bottom, we gain some really powerful insights at a glance. So you can see here if you have enough short-term assets to cover your debt, or maybe how much of your business is financed by borrowing. So these ratios can really help you focus on the most critical areas of your business. Now, jumping back to the top, we also have the flexibility here to choose things like which accounts show in the dashboard calculations and which expenses we actually want to display here on the business snapshot. So this just lets you to reduce the noise and focus on the key areas of importance for your specific business. And we're going to check out the short-term cash flow now for even more insights. Let's jump in there. So this predicts the potential amount of cash that your business will have in the future. And with Analytics Plus, we can see this up to 90 days. So you can have a think about your potential business plans for the upcoming months and help you to feel more in control of your business. We can see a summary of the potential money coming in, going out, and our projected balance of that bank account at the end of the 90 days or whatever period we've selected. And if you hover over this graph, you can also see a breakdown for more information. And this projection includes all bills and invoices that have future due dates. So it's as accurate as possible. Now, it does get even better here with this projection breakdown. So with the help of AI, Xero makes predictions based on transactions that have occurred in the last 3 months. It predicts cash transactions, and it also predicts recurring invoices and bills that aren't even in Xero yet. So this just gives us a more complete picture of our potential cash flow. And something I really want to show you that's available on Analytics Plus is that we can add one-off amounts for scenario planning. So you can add an upcoming purchase to your forecast to see whether that purchase would be a good idea or not. So let's say in this example, we want to buy another van for our business because we want to service more areas. So we're going to add it to our forecast and just see whether we can actually swing the purchase of the van or not. So this is for purchase of a van. It is money going out, and let's say it's estimated to cost, I'm not sure if this is realistic, but 150 grand. And we're going to be very ambitious here. We're going to hopefully buy it by the end of next week. So let's add that. We don't want to repeat this amount because we're just adding it here just to see how it affects our forecast. And let's see what effect it has. Okay, so you might remember that it was a straight line of green across, so very healthy cash flow projected, and it is now showing us a very large dip in red. So of course, this is not looking like the best time right now to make that purchase. So in this case, we could work with our advisor on how we can better plan that investment and bridge that cash gap. So with Analytics Plus, you'll no longer be lost in the dark looking for answers, and you'll have greater confidence to make those important business decisions. Now, you might have noticed that we do have this banner on the top of the last couple of pages that we've looked at. I'm sure that you have seen it. And this is for our new Analytics powered by Sift tool. So I am going to just jump into that and give you a sneak peek of it. So you might have seen, or maybe some of you haven't heard, but we did recently announce our acquisition of Sift Analytics. So for those of you that don't know, Sift is a leading cloud-based platform for reporting, cash flow insights, and analytics. And this tool is where Sift dashboards and digestible visualizations, usually with graphs, have been embedded directly into Xero's platform from Sift. So this is analytics that's powered by Sift. Now, there is a lot that you can do in here, so I'm just going to give you a very quick idea of what it can actually do for your business. So we are in the cash flow manager section now, and with this, you can confidently plan for the future and answer any of those big what if questions. We also have dashboards, so this is one of our graphs. And here you can quickly monitor what matters most to your business, and you can also share insights with your team. So this is all customizable. You can add different widgets, can move them around, and you can remove any that aren't relevant for your particular business or aren't of interest to you. And then finally, with visualizations, just to give you a sneak peek of that one, this is where you can actually turn complex data into a clear story. So it just, again, really helps with being able to visualize your business and what's really going on. So if you do want to learn more about that, if you are a current Xero user, you can actually come along to a webinar that we're running in a few weeks. I think it's the 22nd of October, so a couple of weeks' time, or 3 weeks' time maybe, but I will pop a link for that into the chat box. I'll just pop it in now. There you go. So just make sure to log in if you want to see the dates and be able to subscribe. Okay, so before I hand back to Tim, I just want to let you know about the support that we provide in Xero. So we do have a help center called Xero Central, and you can access that directly from your Xero organization. So if I just jump back into Xero and click that question mark, it brings me straight there. And here you're able to search through help articles, or if you go into the Learning tab, so we can see the Learning tab at the top, you can check out our free courses, our webinars and events, and you'll find them here at the top of the screen. So this will really help you to learn the product. And as a Xero customer, it's all free for you to check out if you need any extra support over anything in Xero. So you might find this useful if you're a bit new and you're just familiarizing yourself around Xero and run into questions. But that is all from me. So I will hand back to Tim now just to go through the end of the webinar. But thank you everyone for your time, and I will make sure to answer your questions in the Q&A. Thanks all.
Thank you very much, Fiona. I've been working with Xero for so many years, I can't count, and I learn something new every time. So I really appreciate that. And Xero doesn't pay me to say this, but I will say I've had clients using every single bit of accounting software under the sun. There is a reason why the vast majority of my clients use Xero, and there is a reason why I recommend that people do. It is a fantastic piece of software. It is not the cheapest in the market, but we're talking a matter of dollars per month more expensive than the competitors, and I think it blows it out of the water. And I will say, just on that last point, the support is fantastic as well. So if you do ever come across an issue that you're not getting the most out of your Xero usage, they are there to help. As are our team as well, if you've experienced our accounting plan product. But let me just talk you through the last few slides. And Fiona's actually done me a service. She's made a couple of them completely redundant. Some of you might be thinking, how do I fit this cash flow idea into my financial reports? I've only just learned the P&L and the balance sheet that you taught me about. Now you're throwing me a new thing. This is not a discrete piece of information. The cash flow statement is the bridge between the P&L and the balance sheet. It connects what I've got, what I owe, with how much I'm earning, how much am I spending. It is really a bridge statement. So actually, accountants can create a cash flow statement from scratch just using a P&L and a balance sheet. You don't need to do that. You should be getting expert advice. If you're learning to do a cash flow statement from scratch, you're nuts. You got better things to do. These metrics, I'm not going to go through to how to calculate them. Again, go away and do a 3-year commerce degree if you want to learn how to do this, or study accounting at TAFE. It's not the most exciting thing. Have a look at that demonstration that Fiona just showed us of how simple it is to calculate these ratios and get this quick sense of how your business is going from a cash flow perspective straight from within the software, the source of truth. If you're exporting data and playing with it and spreadsheeting and doing this and that, again, you're mad. It's all there. The dashboard is your one source of truth. It's one set of accounts. It's fantastic, and I really, really love using it. Just to close out before we go to the Q&A, which we've got plenty to get through as well. This is my favorite slide of all presentations because it's copy and paste. It's the same one I talk about every time. It's the whole idea that your business accounts are only going to be as good as the tools you use and the effort you put in to feed it good information and how regularly you check up on it. Don't just set and forget. Now, what does this mean? Keep your records up to date. Keep reconciling those transactions. Xero is going to make it easier and easier as they do. As it is, it's pretty easy to reconcile most things. Their AI enablement of that is only going to improve, and it's going to make you spend less time on your accounts. Most importantly, do keep your personal stuff separate. Keep a business bank account. Just do business stuff with it. It is such a nightmare for you as a business owner. And if you've got this sort of accountant that charges by the hour, it's going to be a nightmare for you when you come to do your taxes, because they're going to spend a lot of time trying to carve out this non-value adding stuff for you. So have a personal bank account for that stuff. And if you need to borrow money from it, track it that way. Don't spend your business account on personal stuff. So keep on track of your accounts. Have an accountant that if you're paying a subscription to, they're there to be used. They're there for you to check in with either on a regular basis or as needed and say, hey, you're the expert. Can we have a look at my Xero file together? Can you tell me what I need to be doing or any call outs? I love our accounting plan product for that exact reason, because myself and my fellow advisors love getting into the nitty gritty. Show us your books. Let's have a look at your Xero. Let's help you learn how to use it some more. So what are the final takeaways? Cash flow is all about visibility and discipline. There was a great comment in the chat that said that the more I talk to fellow small business owners, the more I realize we're all suffering the same issue. It's profitable businesses with cash flow dilemmas. You can solve these dilemmas, or at least you can recognize them, even if you can't fix them. Someone else said, I'm stuck with 30-day debtor terms when they don't even pay till day 45. At least if you know that's coming, you can plan for it, even if you can't fix it. Again, you can avoid these traps if you have unrealistic forecasts. If you don't forecast the bad as well as the good, if you're too optimistic, you're going to be stuck. If you're trying to do things in spreadsheets, you're not using a tool like Xero, you'll spend so much time in it, you may as well just shut up shop and go and do something else and come join me in my accounting team. If you want to stick with your business, use the tools and the experts that know how to do it. And again, ask an expert. We say the same thing every time. Doesn't have to be me, but use an accountant that you like, that charge reasonably and give you good expertise. And I would love to have you on board. I'll hand back to my good pal, Joel. He can talk you through how Lawpath is here to support.
Thank you so much, Tim. And everyone who's still with us at the moment, thank you so much for sitting through. And Fiona, thank you so much for that guidance and advice on Xero. In my position, I'm always pushing people to use Xero throughout our accounting plans, and I never actually really get an opportunity to educate myself in it. So very insightful. Now, just looking at the polls that you guys put in here, a lot of home-based businesses, and what we're finding is a lot of our clientele who are using our plans more frequently are those who are spending a lot more time working from home, whether you're a parent or whether you just couldn't be bothered moving into the office. If you needed assistance with your accounting and tax or even your legal, contractual reviews, whatever it may be, it's helpful to be able to just click a button and it's all under one roof. You don't have to leave your house, the comfort of your home. You don't have to brush your teeth and have a shower and go out there, when you can just hop on a video call and we're available for you 30 minutes a day whenever you need. So also those who are having issues with the GST, tax deductions and tax compliance, rest assured you can just click a button, hop on a call, and we can assist you with that whenever you need. Before I get into how we can help, I just want to pose one more question to you guys. I feel like Mr. Miyagi today. I wish I had a big old beer because I'm asking all these questions. Do you feel confident with your cash flow forecasting today? Or is it something that is still keeping you up at night? Let that germinate and ruminate in your brain for a little while. If it is a negative response, if you have to face yourself in the mirror, then definitely consider some of our plans because we are here to support you guys. Now, Xero is a brilliant tool, but here's the truth. Xero gives you visibility. Lawpath gives you the expert strategy and compliance layer needed to action those insights and avoid costly traps. When paired together, Lawpath and Xero become an engine room of automated compliance and financial clarity. That is a fact. Now, why Lawpath's accounting and tax plans supercharge your Xero setup is simple. You can track incoming and outgoing cash in real time through Xero, flags late payments, automates reminders, and helps visualize your financial health. What Lawpath adds to that Xero aspect is expert advice and guidance when those numbers raise red flags, or when you have a real accountant and tax agent on a call with you to help make sense of your cash flow structure and deductions. So you're not spending hours and hours trying to figure things out on your own and likely making mistakes with your reporting. ATO and ASIC agent services that remove the risk of late or incorrect lodgements. It's a big one that we're assisting a lot of our clientele with. And compliance is handled for you. So no last minute panic during BAS or end of financial year. If you've got deadlines for your BAS or your tax and the ATO are barking up your tree, you can come to us and we can speak on behalf to ATO and say, hey, look, we've taken on this client. We appreciate that they're a bit late, but please give us more time and we will take care of them. And the ATO will give you more leeway, more time, because we are representing you. Same thing with, with BAS statements, we can extend it for an entire month, right? So there you go, guys. We're essentially a support net. We're a shield of armor for you. So you saw today that visibility is critical, but it's only the first step. What matters most is how you respond. And that's where, again, we come in. We have our accounting and tax plans. Now, real quick, accounting advice plan, you will be paired with a senior chartered accountant. We will help you with your BAS, if you like, cash flow, GST advice, business structuring, payroll, invoicing, you name it. The good thing about the accounting advice plan is it's ongoing. It's very proactive. You can hop on a call whenever you want, and instead of having to waste an hour out of your day hopping on a webinar to find something out that you wish you knew 6 or so months ago, you can hop on a call with one of our accountants who Tim personally picked, and they will be able to answer questions and preempt anything that your business is dealing with. You don't necessarily have to have questions and a fully loaded cache of things to bring to us. We will ask you questions, we will talk to you, we will work with you and help you upscale. On the tax plan, there isn't necessarily a DIY aspect like the accounting advice. We would do your BAS for you, we would do your tax for you, we would do end of financial reporting and everything else involved with that. And the beautiful thing is there's a lot of tax incentives and strategies involved with this communication as well. So the accounting advice plan, guys, is $1,668 per year. It's a single payment, and you will have a senior accountant at your beck and call whenever you want for 12 months. Now, because you are attending the webinar, you get a 20% discount, so that brings it down to $1,334, completely tax deductible. If you wanted the tax plan, it is $3,072. If you combine the two together, you get the accounting and tax plan for 12 months for $3,792. So essentially, you're getting the tax plan for next to nothing. That's everything that I could honestly recommend for you today in conjunction with the with Xero. And if anyone else is considering either of these options, but you're also wanting to upscale into bringing on employment for the first time, if you need to refresh your contracts, legislation changes every 6 months, guys. You need to make sure that your contracts are up to date. If you're being audited, if you're in the NDIS business, or if you're in the consumables, you guys are getting hounded all the time. So you need to make sure that you're on top of these things. You can get it all from us over here at Lawpath. Legal advice plan is the exact same price as the accounting, and you can also get our entire document library. That's 550 plus legal contracts pre-written, so you don't have to write them yourself or pay a lawyer $800 per hour to make them for you. That's only $468. If you bundle all these items together, you can have a lawyer, accountant, tax agent, all your compliance documents under one roof, and we have all the discounts for you. So if anyone is interested in that, you can go ahead and chuck in yes in the chat, and I will make sure that I send special offers to you afterwards, and I can even contact you and learn a little bit about what you've got going on and help you determine whether or not now is the right time to use us or later. Or I can call you post-webinar and we can have a chat then. Now, without further ado, we will jump into the Q&A. Thank you all so much for your patience. We will go ahead and start with the chat real quick. So I believe we had Kat with, is there a basic beginning training? No, that's way late. Cass R, why is paying employees late going to remove tax deductions?
Yeah, technically to have a tax deduction at year end for your salaries paid, you have to have complied with PAYG withholding regulations. So you have to have withheld tax appropriately. As a more urgent matter on a day-to-day basis, the payment of superannuation is your more pressing concern. So even if you've withheld all the right taxes and you're paying your PAYG withholding, if you're paying your superannuation even a couple of days late, too bad, you're going to lose the tax deduction for it, which, by the way, you still have to pay the super, you're just going to lose the tax deduction for it. So there's a number of things like that are going on. Good question, though, Cass.
We've got a wonderful comment from Marty, 20 minutes running, and Timothy's illustrated the dark sides and close to a stroke. Marty, we hope you're fine over there and you're still with us. Akram mentioned most of my clients are too big for me to alter the contracts, standard contracts, T's and C's. Unfortunately, though, payment terms are 30 and half pay by day is 45. Any comments on that, Tim?
Yeah, I think it's deeply unethical that people do this, but I've seen even very large businesses, if they're on 30-day payment terms, they don't open the invoice until day 29. And then funnily enough, their accounts payable team looks at it and goes, oh, we've got a query about this one. And then you almost reset the clock while you answer their question on day 29. So they delay another 2 weeks or 3 weeks. Standard terms are difficult to avoid. There's nothing to say you can't still try a negotiation. But again, it's that planning. If you know that your clients do this, well, let's budget and cash flow for it appropriately.
Thank you. Melinda Durich has asked, is there a way with the cash flow predictor that you can split the amount of the invoices, part payments? What do you think? Maybe should we get Fiona?
Hi, Joel.
Yeah, Fiona.
Yeah. No, I actually have been chatting because Melinda put a couple of questions about that into the Q&A as well. So I've been responding to her there. But yes, there is a way. If anyone's interested, you can have a look at the answer I put into the answered column of the Q&A.
Thank you, Melinda. Michael Jones has asked, is there a way to get a personal reminder, not to client, only when the final invoice reminder has been sent and the client still hasn't paid?
There isn't a way that you can do that, but that's where the age receivable summary report can really come in handy because you can see the exact kind of period that that invoice has been outstanding for. So you'll be able to tell from there if they've already gotten their final reminder.
Lovely. And Sue Klassen has asked, is there a way to mark a bill as not to be paid yet, as the amount may be in dispute?
I've also been chatting with Sue in the Q&A as well about this one, but yeah, I
Apologies.
just made a suggestion of a different status that you could use for that. Yeah, perfect.
Thank you so much. Great question. Great question. So Ewan has asked, so once you've done the batch payment, has that actually paid the bills? I missed what Fiona discussed there at the end of the section about the transferring the batch report to your bank account. And I do apologize, Fiona, if this was mentioned in the chat as well.
No, it's all good. It actually was just funny. I'm sure there are some that aren't in the Q&A, but no, I'm happy to answer them out loud anyway because it might be of interest to other people. So this doesn't actually pay the bills. You would still need to go and pay them in the bank, but this is just how you're actually paying them in bulk from Xero.
Lovely. Julian Kershaw has asked, that was the comment Tim had mentioned. So the more I speak to fellow small business owners, the more I realize it's not just me lying awake at night with good profit locked up in poor cash flow. Yeah, amen, amen, Julian. If anyone is, if anyone is dealing with something along these lines and you just want greater clarity and you just want to have some general conversations about this stuff, please consider our plans. That's what they're there for. As I mentioned, you don't always have to be bringing something significant to our accountants or our lawyers. You're not necessarily wasting their time. You've paid for an entire year of unlimited consultation. So if you just want to have a general conversation every now and then, ask a question that might benefit you in the next 6 to 12 months, you can. We're here to communicate with you. We're here to be a counsel in a way. So I dare say that might be everything in the chat. Let's have a look here. Ruth Pitt, Ruth, if you're still available on the call, yes, as you can see on the screen, we do have a 90% off for the first 6 months for anyone who wishes to take us up on that offer. Whether you have just joined us today or you have a free account with us, or if you're a paid member over here at Lawpath, this discount is available for you. So please take advantage of that when you can. And then Tara Spokes, Tim, if you'd like to take.
Yeah, absolutely. Tara's asked for a small service-based business with 6 staff, how much of a buffer should we have? Again, it depends on your business, so just general advice. You should have enough of a buffer that on your worst day, in your normal flow of business, you know what your worst day looks like in terms of your bank account. Go and check your running balance. What does your worst day look like? And then imagine something believably bad happened to your business. If you run a service business, perhaps you don't have big capital expenditure, but if you had a cafe and on your worst day, the fridge broke, and okay, how much would you need to spend today, either to get the fridge fixed, or if we close down, what would that cash flow look like? So the buffer is basically take what your existing sort of worst day is in your normal business cycle, and then pick up some believable expenses. Not all of them at once, the sky's not going to fall in, but that is the size of buffer you should aim for. And we've had another question from Tara as well. How do you balance those decisions around non-essential spending when it's on internal BD? Is there a rough percentage of income that we should be capping internal spend on? No, not really. That's going to be very specific for your business. What I would say is that you should always have an idea of your unit cost, by which I mean, if you're out there spending $10, if you're out there selling a thing for $10, a very standard metric is that it should not cost you more than $5 to make this thing. The idea of this 50% gross profit margin, that your income minus your cost of sales, it's not universal, but it's a good rule of thumb. because then you've got 50% that you can cover your operating expenses and your nitty gritty and including your internal BD probably, and then also leaving yourself a bit of profit. So that'd be the most universal figure I would see. Liana has asked, and I think she's dropped off, are bookkeeping plans available? Yes, we do offer bookkeeping as well. It's a more bespoke service, but Joel can certainly reach out to anyone who's interested in bookkeeping. We do add that on as well. I would say that for micro small businesses, I think Xero being so good and our accounting platform being so good and reasonably priced, we often teach clients to do their own bookkeeping because it's for small businesses, it's really, really a good, cheap way of doing it. But we recognize that some people are more advanced and some people need a dedicated bookkeeper. We're very happy to help out there as well. And I believe that might be all on the Q&A side, Joel.
Wonderful. Well, once again, thank you everyone for attending today. We really appreciate it. And Tim and Fiona, it was an absolute pleasure. Fiona, thank you so much for joining us today and being a spokesperson and representative from Xero. We will have more information on Fiona's other webinar that she mentioned in the email that we send out. And if anyone has any further questions for her, we will go ahead and throw her details in there for you as well. I will send an email out. It will have all the slides. It will have today's episode attached as well as our offers. If you had to duck out early, fear not, everything will be there for you with a little bow in it. So once again, thank you all for attending and joining us for an hour and 15 today. And for our speakers, always a pleasure.
Thanks very much, everyone. And thank you especially, Fiona. Great to have you.
Thanks for having me.